Welcome to my channel where we take the rent out of parent and dive into the exciting world of monthly rental information and statistics for the Ottawa real estate market. Get ready to laugh, cry, and maybe even reconsider your current living situation as we explore the highs and lows of the renting game in Canada's capital. My name is Roch St-Georges. I'm a real estate broker in Ottawa. I help families and individuals with the purchase, sale, or rental of real estate in our city. Last month, Ottawa Realtors rented 606 properties through the local MLS. This is up 27.6% month over month and up 25.5% year over year. We can see the demand and supply for rental properties has increased since we saw mortgage rates increase last March. This has evidently pushed some buyers out of the market. In March, rental properties rented for an average of $2,581. The average rental price was up $100 or 4% month over month and up 3% year over year. The median price was $2,400. Ottawa landlords are renting their rental properties in an average of 37 days, down from 39 days a month earlier. Since 2017, regardless of the time of the year, we're pretty much seen properties take under 40 days to rent. In March, Ottawa had 1 month of rental inventory, which is of course quite low. However, this isn't new for the most part. We've been seeing inventory stay in the 1 to 2 months range since 2017. Rental inventory has historically peaked in the month of December, while in the summer months we tend to see very low inventory, sometimes dipping below 1 month of inventory. We're only in April and we're already at 1 month of inventory, and we're heading into the summer months, which historically has meant even lower inventory levels. Now, if you're planning to move to Ottawa, or if you're currently in Ottawa looking for a rental property, here's what you can expect to pay. In March, the average detached residential property was $3,040. The average row house or semi-detached home was $2,409. Finally, the average apartment or stacked apartment unit was $2,469. In March, Ottawa had 553 active listings on the local MLS, relatively unchanged from March of last year when we had 561 properties. Rental inventory has, however, seen a sharp decline since November of 2022, when we saw a peak of 889 active rental units on the market. This represents a 37.8% drop in active listings. With Canada's plan of bringing over 500,000 new immigrants for the next few years, competition for quality, affordable rentals could remain competitive. We even saw news last week that in 2022, Canada's population increased by 1 million. For a country that is already not building sufficient housing, the outlook for the rental market can be scary for tenants. The Ottawa rental vacancy rate, according to CMHC, is 2.1%. This is great news for landlords who are looking to fill vacancies, but not so much for tenants who are looking for rental properties that don't break the bank. With interest rates having increased rapidly and with the prospects of them staying elevated for a while, it will make it much more difficult for small and medium-sized multifamily rental property developers to build rental units. In a time where we should be ramping up construction of rentals, the current market environment makes it difficult for developers to make projects financially viable. What we are seeing is large-scale developers, oftentimes large real estate investment trusts, build large-scale concrete rental properties. Folks, building a concrete high-rise is expensive, and this translates into higher rents for tenants who will be moving in. Let's take this apartment building that was recently built near Blair Mall and the LRT station. The Frontier is owned and managed by Killam and RioCan, two large Canadian REITs that are publicly traded. Studio apartments start at $1,640 for 459 square feet. A one bedroom will run you $2,000 a month for 664 square feet. And then finally, a 2-bedroom unit are $2,695 for 1,069 square foot. If we want more affordable rentals, in my opinion, we need to see more of these smaller scale wood construction developments with 4 to 12 units. These are much cheaper to build on a per square foot basis, but with the high interest rates and expensive skilled labor seen today, combined with the regulatory environment spanning from restrictive zoning to expensive development charges, we may be seeing fewer properties of this type in the near term. Some owners of properties zoned for multifamily development are choosing to sell their project instead of building them. The reason for putting these projects up for sale could vary, but they could be related to the current high interest rates, the high construction and development costs, or it could even be related to the less than ideal business environment for small and medium-sized landlords in Ottawa and Ontario. High inflation in the 5 to 7% range recently has meant operating expenses on these properties have gone up, but the province does limit the rent increase to 2.5%, meaning landlords have a tighter profit margin. We also have the Landlord and Tenant Board in Ontario that is seeing a massive backlog. The latest available data from the Landlord Tenant Board was at the 2022 year end, when they had 32,800 active cases. This means landlords and tenants must wait months, sometimes years, for their cases to be heard. We also saw new bylaws, including the ban on short-term rentals and the new housing property management bylaw, which adds to the landlord's regulatory requirements. Finally, more forms and filings must be completed thanks to the City of Ottawa vacant unit tax, where landlords must file information on their rental units and leases. This must be repeated for the underused housing tax that was brought in by the Canadian government in January 2022. These reasons have pushed many small and medium-sized landlords to sell their property or choose to invest in a more friendly, landlord-friendly province. Some simply prefer to join the big guys and passively invest in real estate by buying REITs on the stock market, which currently gives them 5% or more in dividend yields that are paid monthly with no physical work on their part and no evening or weekend calls from their tenants. Here are some examples of active listings currently being sold by investors and developers for small and medium-sized developments projects. In Vanier, we have a land for a 8-unit project, near Britannia, a 24-unit project, and a 36-unit project in Kemptville. Many of these projects may not be financially viable, even with the high rental rates we are seeing today. That's all for me. As you can see, the real estate market continues to be dynamic and ever-changing, with many factors influencing it. We hope this video has provided you with valuable insights into the current state of the Ottawa real estate market, and that you have gained a better understanding of what is to be expected in the future. If you have any questions or comments, please feel free to leave them in the comments sections below. If you found this video informative, please don't forget to give it a thumbs up and share with friends or family members. If you want to discuss your rental search, or if you're a landlord looking to fill vacancy, please feel free to reach out to me using the information on the screen. Thank you so much. Merci. Ciao. This is the end of the video. If you liked what you heard and saw, please feel free to watch this video here or that video there. Thank you. Ciao.